Alright guys, welcome back to class. In this section we are going to be integrating our we're going to be building our statement of financial position, which is the balance sheet. We're going to be building the balance sheet. So it's a statement of financial position. Financial position, right? Also called the balance sheet, right? So let's go ahead and see that. First of all, let's arrange this place. Let's just arrange some of the things here. Okay, now this place not here. Out. We have what where is the number, where is the number? So we have FA. Okay, so have this. Want to customize custom, and then to apply this, right? So we have this, and this is going to be our explanatory style, and this I'm going to align it to what I'm going to align this to the what, to the left, to the right, I mean. Then I'm going to this two, I'm going to just apply the explanatory style here too. Then here is going to be our asset. We're going to apply the heading one, right? So this is going to be what, heading two. This is going to be heading two. Current asset is going to be current asset, heading two. Then we have this, all right? So we also want to do this, apply this, and apply our subtotal style. And on the asset side, we're going to apply our total sales style. Down here we're going to apply what, we're going to apply this value. We're going to apply what heading one. Then non-current asset, we're going to apply heading two, right? So apply heading two. Then I think we still have something around here. Do we? Okay, this is our total asset. Yes, I knew I have something around here. So this is our total asset. Sorry, our total non-current asset. We have this. Then we have what again here? We have this also. Apply this. This is our current asset. Now this part of the current asset, I don't think we need anything here. So just bold this, underline it. This two, bold it and underline. Right, so we have this. If that's the case, then we don't need that formatting here. I don't think we need that here, so we don't need it here. No, we don't need it here. So apply this. Nope. Alt H E EF, yes. So we just do this, bold and underline, bold and underline. Is that it? Yes, bold and underline. Right, so we have this here, we have this, and we have subtotal, and this we have this. Then we apply the total style, right? So here we have apply the what, we apply the what, the heading one style, right? The share capital, earnings. We have the total equity. Total equity is going to be subtotal. Then we have our equity. Our equity should be this. We have the total equity should be this. Okay, then this is our model check. We just apply the explanatory. That's what is going to guide us to know that our model has actually balanced, right? So we have this layout like you're seeing it beautifully. Why is it easy like this? Because we have previously laid out these structures. We have previously laid out these structures. That is why it's very easy for us here. Now let's go ahead and see. Now we have what? We have our net PPE, which is now our total asset. So our net asset after depreciation, just go back to our depreciation schedule. Go back to our depreciation schedule. That's our capital asset. Capex schedule, just click and this, just okay. But before we do that, we have to divide it by the divisor. We have this value. Then what do we have? You sum it up. We have this, right? So you come to your inventory equals to what? Come to your calculations. You go to your working capitals. Your working capital, that is where you're going to find your inventory. So this is our inventory right now. So divide it by what? Divide by the divisor. You see, we are not doing any calculation. So here, I can go ahead and just drag, right? So under this cash part, we have not built our cash and cash equivalent yet. So we're just going to apply this as a reminder. So just change this. We have this. Now what is our total asset? Our total asset is this plus what? Plus our current asset. We have this. They can go ahead and select the whole thing and apply it so it will fill it into the right. So we have that, and then we come back to our long time debts. That's our loan. Our debts, we have this. So we just go ahead and go to our loan schedule. Under our calculations, come down to our loan schedule. What is our loan? What is our loan? So our loan value is going to be the net. We have this. So divided by what? Divided by our divisor. Divided by our divisor. But then sum it up, get the total long-term debt. So we have this again. What is our now trade payables? Our trade payables, go to your calculation, go to your working capital. I have our trade payables to be this, and divided by the divisor. Divided by the divisor, you enter. Then our accruals, just do the same thing because it is in the same place. There's consistency existing between them. I just did Control D and I have that. So here I just did Alt equal to sum it. Now here I will say equals to this plus this. That's total long-term debt, long-term loan, long-term liability plus current liability. This will give you a total liability. So just go ahead and fill this in. So you can see we are now building our financial statement are coming into place. We started with the income statement and now we are in the balance sheet, which is the statement of financial position, right? So with this, we have this. Now, what is our share capital, which is what is our equity? Our equity is going to be equal to this. Equity schedule, we have what? Equity schedule, we have equity schedule. Okay, this is our equity, this is our balance, ending balance. First of all, you divide it by the divisor. Divide by the divisor, we have this. Then what is our what? Retained earnings, right? Retained earnings. Now, retained earnings, we have not calculated that yet. We have not integrated that, but let's go ahead. Our retained earnings is what? Retained earnings is this. Now we are going to say divided by the divisor. Divided by the divisor, we have this. So to sum this up, we have this. Then this is going to be this plus what? Plus this. We have the total liability and equity. So we have this now filling in. So we go back to our retained earnings. Our retained earnings, go back to the calculations because we have now calculated it. What we are going to do is to remove this shade we put. Remove the shade we put, then you come back here, come to your income statement, put equal to, come to your income statement, bring in your profit for the year. So bring in your profit, right? Because the profit is already divided, what we are going to do in this case is to multiply it by the divisor, right? Multiply it by the divisor so that it will give us the same value. When you do that, you just fill it into the right. So you have your what? we have our dividend. So you can see this is our dividend. When you come back to your income statement, you can see that it has been filled in and it has been divided by the divisor as well. So you can see this is done. So if you now check our balance, let's say we are doing a balance check, we are going to say is our total asset equals to our total what liability. Of course, we're going to have false. Why do we have false? Because there is a space that we have not filled yet on the income statement, on the balance sheet, on the current asset side, which is the cash and cash equivalent. And before we can get that cash and cash equivalent, we need to build our cash flow statement. So in the next section, I'm going to show you how to build a cash flow statement with ease, or rather we are going to continue on this section how to build a cash statement, right? So let's go ahead and build our cash flow statement. Let's see our cash flow statement. This is our cash flow statement. We first of all start by formatting this, right? Formatting this, we go to Chrome F A, right? So we have this, and we will come back to this place. Then we apply what? Apply our style. Apply our style here. Then we just okay. We have this. Then this we say is explanatory. Apply the explanatory style. Then we align this to the right. Remember, consistency is very important in your model, right? So apply this. So here we are going to also apply our heading style, our heading 1 style. Apply the heading 1 style. So this net profit before earning before interest, we are going to bring it from the income statement. Then we have what? Let me look at where we have right. So this is adjustment. We are going to apply our explanatory style here. Then this is our depreciation. These are changes in operating working capital. I will explain that again later, and I'll explain why I still have this here, right? So this is our net what? Net cash flow from operating activities. Net cash flow from operating activities is going to be on our subtotal, right? So we have the operating cash from investing activities, cash from investing activities, format it, give it a heading. Then we have net cash flows from investing activities. Net cash flows from investing activities is going to take our subtotal 2. Then we have this cash from financing activities is also going to take our heading 1. Now we have equity, we have principal repayment and all this. So we just format this to be what? To, let's say this is it. Then this is our schedule, which is going to show our opening and closing balance for the year. So we are going to apply our this. So this one we apply our sales total, our total sales time. Why don't we do that? We now say okay, we have now. Let me just quickly add something here. I don't want this to remove this. I'll freeze the face. I'll freeze this side, right? I'll freeze it so that I can be having a view of what is going up there. So this our opening balance is going to be the closing balance in the previous year, and this is the summation of all this. Then we have this. Then you can just fill this in. We have this value. Now let's come back. We're going to start off by building our cash flow statement. We'll start by, if you're starting with a net profit, if you're starting with a net profit for the year, then there is no need for tax. But if you're not starting with a net profit for the year, then there's need to also bring in your tax. So in this case, depending on the layout of your cash flow statement, you can build it this way. So let's go ahead and say come to what our income statement. Then our earning before tax, we just put this. Earning before tax is this. Now our adjustments for non-cash item, which is depreciation. You go to your income statement again. We have our depreciation. So what are we doing here? In this case, what we are doing here, we are adding back depreciation. So what we are doing here is we are adding back depreciation, right? We are adding it back, right? So let's see, we have what? We have changes in operating working capital. Now, changes in operating capital, these are your working capitals, right? These are your working capital, but I have already done this calculation earlier on. So there's no need of me keeping these items. So I will just go ahead and delete these items I'll now go back and say equal to, come to my calculations, and I'll look for my changes in operating working capital. This are my changes in working capital, right? Or operating working capital. This is what I have, but I need to divide it by the divisor, right? Divide by the divisor, divided by the divisor, then I have this value right here. So this is tax. Like I said, if you're starting with this value, you're starting with the earning before tax, then there's no need for there is need for this tax. But if you are starting with the net profit for the year, all right, so I have made that mistake again. Okay, I have not. Okay, we are right. Okay, I was thinking I put the net profit for the year. So here, so there's no need for this. So this is going to take explanatory sales time. Explanatory sales time. We have this, right? So this now is going to be how much is the tax? Come back to your income statement. You have there. What am I doing? Okay, tax, yes. So we have this, we have this. So what are you going to do? We are going to just do summation of everything here. Summation of everything here. Now the reason why this thing I did not add anything or do anything to it, because it's already in in an absolute value here. That is why I just did the summation and we have this value. Right. So I will just fill this in. Right, we have this value. So we are done with the cash flow from operating activities, and you know why we have this value. We have this value because I already done the calculation in the previous session, which is the calculation part. If you don't know how we got to that, you have to go back and watch the calculation aspect of how we did all this, right? So let's go ahead again and look at how to get our what we're going to get our PPE. Now the PPE in this case is not going to be our net PPE, it's going to be the gross PPE. That means how much we actually spend to get those assets. That is what we are using here, and because it's an investing activity, it means cash is going out. So we are going to include, we are going to put it, we are going to remove it from our cash, right? That means we don't have that money again with us. So let's go ahead to our calculations and see. Let's go to your PPE. I'll go to your PPE. What do we have? What do we have? All right. So quickly, like I said, this our PPE is going to be a negative value, right? But it's going to be on what is going to be here and divided by the divisor. Divided by the divisor. Then you do this. Then sum it if we have like more PPE. Then you fill this into the right. So we have this as our PPE. It means money is going out of the business. Now, from then cash from financing activities means money is coming into the business, right? Though money is coming into business, but there are obligations for this money. So we are going to go back and say what is the money that came into the business. We're going to go ahead and say where is our equity? Our equity quickly. Our equity is going to be our equity. Where is it? Where is it? Okay, this is it. So this is our equity, right? Divisor divided by the divisor, we have this. Then we have the loan, and the loan is also going to take the same shape. Let's go back up and say this is our loan. So divided by the divisor, divided by the divisor. This is our money coming. Now on the part of the dividend, we are going to go to our retained earnings. Dividend, we are going to go to our retained earnings because that is where we are paying our investors from. So dividend is going to be this divided by what? The divisor. Dividends is going to be this divided by the divisor, right? Now principal repayment is going to also be this because this is payment. Okay, I'm coming. Dividend is going, repayment is going to be equal to this minus, because we're putting the minus sign because we are removing it, right? So you're going to be come to your interest, come to your repayments. We have this value repayment, then you divided by what? The divisor, then you enter. We have this, then this also you put the negative sign before, after the equal to sign, then you enter because money is going out, right? Money is going out, and sum the whole of this. You have this value, then you can drag forward. Now you can see this is what we have right now. So we come back here, we say okay, now this is going to be what? This is going to be equals to what we have here. this plus this plus this and plus this. That is our net cash flow from operating activities plus our net cash flow from financing from investing activities plus our net cash flow from what from finance yeah investing activities. Then you just press enter. See, this is what we have. When you're done with that, you just click and drag. So, moment of truth. This is when you will know whether your account is going to balance or your account is not going to balance. Right? If there's no balance, that means there's a problem somewhere. You just have to take your time and go through it to find out what is actually wrong. So when you come here, you come to your income statement, your balance sheet here, and you say equal to your cash flow, then the ending balance, you enter. Right? So it's still giving you false. That means something is wrong. What are you going to do? You're going to say equals to this. What is the difference? What is the difference? You say this minus what? Minus this. Let's see. But the difference is very high, right? That means something is wrong. Something is wrong, and we have to go and check what is wrong, right? We have to go and find out what is actually wrong with our uh, calculation. So definitely, if that does not answer our problem, that means we have a problem. We have to find out. Here you can see that the difference is actually very high. Your asset side is greater than your liability side. So you just need to go back and look into it, find the problem. I like building models like this, especially when I'm teaching. I like building models that will give me result like this. No model that will just give me absolute result and say, oh, finally our model advanced. In real time, in real situation, sometimes you face this trouble, right? So when we come back in the next section, we are going to see what actually happened to our model, why it did not balance, right? So thank you very much. And if you have not subscribed, please don't forget we need to solve this problem. We need to solve this problem. We need to know where this problem is coming from. So for you to see where this problem is coming from, for us to be able to find out where the problem is coming, then all of us must be in this class. And why are we going to be in this class? The only way for you to be in this class is by subscribing to this YouTube channel, like the YouTube channel, and share to somebody that you think that has the problem, that has a solution to the problem, even though the person is not in this class, so that the person will start watching from the beginning and you also come and give us a solution. Thank you very much and see you in the next class. Don't forget again, if you need this file, just say I need the file in the comment section and I will tell you how to get it. Thank you and see you in the next class. All right, guys, welcome back to Business Hub. In this section, we are going to be correcting our mistake. Like I said, you have to go and invite somebody to join us in solving this problem. The problem is that we finished preparing our model, but our financial statement, our account did not balance. Remember that if this account did not balance, then there is nothing we can do again. This is the last bus stop, because every other thing we are going to do, the business valuation we are going to do, if this account actually did not balance, did not agree with each other, then everything we are going to be doing is useless. So we say we are going to go and look into it and say we agreed. Yes, we agreed that we are going to go and look into it and see where the problem is coming from. So in the comment section, I want you to just say what you think or what you were able to identify that is a problem, why this account did not balance. So when you do that, then return back and see if your answer is right by watching the correction we are going to make, right? So if you look at the statement, everything we build, like if you look at it from head to toe, every integration we did is actually correct, right? Right? There's not, it's not always like that, right? But if you come to our cash flow statement, okay, cash flow statement, let's rename it. You see another problem, right? This is where our problem is coming from, because we did not rename it. One problem, we did not rename it. Don't mind me. Cash flow statements, right? This is our cash flow statement, right? So we look at it and say, what is the problem now? Why is this cash flow statement not balancing? Why is this cash flow statement like this? And if you look at it quickly, you can see that there's nothing wrong with this thing though. If you're looking at it with a clear eyes, but like this now, all you need to do is just to go and take one bottle. I'm not encouraging you to go and take beer. I'm saying that you should pay close attention to details. Now, Look at the entire financial statement. There is nothing wrong. All the figures that we have here are actually what is supposed to be here. But there is one single mistake we are making. One single mistake. Where we are supposed to deduct, we are adding. So what was that? This is our tax. The tax is supposed to be a deduction, not an addition. So what we need to do is just to add a negative sign, a minus sign in front of it, and we just to enter. So just once you do that, just fill it in, and you go back to your statement of financial position. You see that everything says true, true, true. That means our financial statement has balance. Say yay, clap for yourself if you did, if you were able to identify what the problem is, right? If you are not able to identify what the problem was on your own, then clap for me. Yes, clap for me on the comment section by saying clapping for me on the comment section. I'll actually feel it, right? So thank you very much, and that is it on this section. We are able to balance our account, and everything you can see, every calculations we did, everything, the interpretation of everything we did is now saying okay, that's true, right? So we can just say we can use if statement here. If we can say if this equal to this, then what, right? Then what we say, then what, comma, then what, we are saying okay, right? Otherwise, return what, say error, right? Say error, enter, right? So because it's okay, it's now okay. So we can now come to our model check, can now come to our model check and say okay. Our model check is and say okay, right? So everything is okay. Then fill this and just centralize it. Have this like this. Now you can go ahead and delete this, right? You can go ahead and delete this. So this is what we have. Our financial statement has balance. You can go ahead and edit this and say okay, okay, right? So the next thing we are going to do is build a scenario. We're going to build a scenario around this. We're going to build a scenario around this. So I'm actually very tired right now. I don't think I can be able to do any other thing. And the only thing I will say is I keep on practicing. And in the next section, we're going to build this scenario and do the company valuation, right? And build the valuation. So when we are done with the valuation, we can now see the worth of the business. If we start this business in so year, the business, we anticipate that the business, or we expect that the business will be worth this amount, right? So that is what we're going to be doing. So when we come back in the next section, we're going to be building the what? We're going to be building the scenario analysis sheet and schedule, and also do our company valuation. For the company, for startup companies, the valuation we do is a this year valuation, right? We don't do comparable company valuations on startup company because they don't have basics yet, right? So when we return back, that is what we are going to be doing. And thank you for joining us again. Please subscribe to this YouTube channel and support it. Go like, just drop a comment, just tell us anything at all. We appreciate that. And again, if you need this file, just drop in the comment section. I need the file, then I will tell you what to do and how to get it. So thank you very much, and see you in the next section.